Good evening, VV Nation. My name is Ryan. Welcome to the channel, especially if this is your first time. You find the video informative, make sure you hit that like button, subscribe to the channel so that way we can keep you updated going forward. Now, that being said, the last couple videos and the last couple items I've pushed on the channel being petroleum stocks, just a natural fit with geopolitical concerns, and obviously with the hurricanes coming in, we're seeing another hurricane. Definitely my prayers, Florida, for that. Now, that being said, petroleum, I see this trade coming to an end here soon. We saw remarks from Saudi Arabia and OPEC saying that they're willing to bring the price down to $50 a barrel to get their OPEC members in line. In addition to that, after some research, Iran only supplies about 4% of the total world's oil output. That being said, OPEC has already, discussed, supplementing that if anything were to happen to their infrastructure when it comes to petroleum and the conflict between them and Israel. So that being said, with the hurricanes as well, insurance stocks, I know I talked about that recently. I'm not sure how that's going to play out, so just be careful on those insurance stocks. I see them, stalling out, not doing too much as of late. But the space I have for you this evening, there's actually two spaces for you, two industries we're going to take a look at, very under the radar. One of them has phenomenal performance over the last 12 months. I was looking at the stocks and there are no big names really. So tonight's video, you're going to get two industries you're probably not very familiar with and a bunch of great stock recommendations that are probably not on your radar. So with all this information being said, let's go ahead and jump into the VectorVest 7 software and see how we can make some money. The first industry I wanted to bring to your attention, retail computers. That's right. Look at the price chart itself. Lower left, upper right, very little volatility in between. I do have it on a VectorVest simple layout here just to keep things very simple today. That being said, look at the blue line. This is our stop price. The price action of this industry here never crossed below our stop price here, never giving a sell recommendation on this industry over the last 12 months. On top of that, RT, or relative timing, which looks at the short-term price trend, been above 1 and favorable territory for the most part over the last 12 months, and the earnings per share on the rise as well. So you can see exactly why I like this space. Just hit a new intraday high as of yesterday. And looking at price action today, we are in the positive at $98.20. Now, this one's on a little bit different of a layout, more of a technical trade here. I do have it on the MPI layout. The moving averages are 5 and 40-day moving average of our stop price in our favor, giving us a sense of trend right now to the upside. The moving averages with our RT relative timing, the 5 and 40-day, which give us a sense of trigger, also favorable with the bulls right now with the 5-day above the 40-day moving average. And if I drag this arrow back, giving us a little bit more sense of time, you can see I drew this downward trend line going back to May 2023. Price action finally broke above this downward trend line. We do see retracement here with some buying pressure. If I take a look, yesterday's candlestick. So as long as the price action stays above this trend line here and we can surpass the prior high coming in at $39.94, this might just be a great bottom fishing play or momentum play, depending how you look at it. All right, VV Nation, these are the two spaces I have for you. I found 9 stocks out of these two industries. The one I've highlighted, that's going to be the chemical fertilizer space. You can see just by ranking these by overall value, safety, and timing, the computer retail space definitely coming to the top of the list here for the most part. And what I do like about this is that these stocks collectively do have a lot of buy ratings across the board here. RT's relative timing, only 2 stocks below 1 right now, being GIC and CVR Partners. As well, RS relative safety, the safer stocks already at the top of the list here. You can see a lot of these stocks do have RS below 1. So for the most part, if you're thinking about the fertilizer space, more of a momentum trade breaking that downward trend. But as far as the computer retail space, we saw the graph over the last 12 months, whether you're a momentum trader or you're looking for long-term positions, definitely pay attention to these stocks. Now, I do have the watch list average down below just to give us a sense of these stocks. Overall, they are slightly overvalued, on average trading around $86, the value coming in at 81. RVRS is above 1 ever so slightly at 1.06 and 1.02 respectively. So the fundamentals are better than those than the average stock in the database. RT relative timing, these stocks are in an uptrend overall. VSD comes in at 1.13. The CI, I'm not surprised that's below 1 right now. We saw the fertilizer industry trending lower since 2023. So I'm not surprised with the CI at 0.95, doing some bottom fishing there. Sales growth rate is at -7, while earnings growth rate sits at 7. However, if we look into the individual numbers here, we see that the negative numbers really come in when it comes to the fertilizer chemical space, while computer retail is seeing double digits in both categories here with only a -8 when it comes to sales growth rate on NSIT. Therefore, if you are more aggressive in nature, the appropriate fit would be the chemical fertilizer space, while computer retail seems like the safer bet. All right, now let's break these stocks down. The first one being NSIT. Look, clearly an uptrend right now. The only concern is the prior high. We will see some resistance there around 228. The stock trading at 220. So if you want to see some confirmation, you have to give up about $10. Both a fresh buy rating and all the moving averages in our favor. Next up is AGYS. You can see big bodied candlestick yesterday, bring the three back above the 8-day exponential moving average. Follow through today, currently trading at $109. Resistance doesn't come in until 114, so we do have about another 5% until we hit another resistance level. Now this chart I like, lower left, upper right, moving averages in our favor. I don't like this upper wick right here, so if you're not already in this position, we want to get above 106.44 just for some confirmation. Now if you're jealous you missed this big run up on SMG, we do have a pullback here, price action still above the 20-day exponential moving average and the 3 still above the 8-day. I wouldn't give up on this quite yet, so if we can surpass yesterday's high, coming in at 85.38, just giving us some more confirmation to the upside, getting this position, not a bad idea. Now, if you happen to be an SMG, my stop would be either the low from 2 days ago at $82 or just utilize the 20-day exponential moving average. Next up is SQM. This is going to be one of those bottom fishing strategies I mentioned in the chemical fertilizers. Now, price action is getting into this resistance zone here. We see these prior swing highs between $42.85 and $43.69. I would just like to see price action break above this zone, showing continued confirmation to the upside. Both all the moving averages in our favor right now. Don't necessarily see a reason for concern quite yet. Here we have global industries, a lot of consolidation. You see the top of this channel coming in around $34.71, while the bottom of this consolidation is around $30.91. Moving averages are not in our favor. Not the time to be buying the stock. I just want to put it on your radar here. If we get back above this level around $34.71, there is a gap to fill shortly after that, beginning around $37 and ending around $38.40 to the upside. Here we have CF Industries. If I scoot back, we do see a level of resistance here at $87.11. Right now, we're currently at $87.10. Therefore, I'd like to see price action surpass today's high, coming in at $87.65. Now, here we have IPI, some consolidation here, whether you want to call it a symmetrical triangle, pennant pattern. You can see consolidation, breakout to the downside. Well, Ryan, why do you have on this list, right? I do see some buying pressure here, and with price action just getting back above the 20-day exponential moving average, 3 and 8 just crossed over here. Do see a little whipsaw, maybe just to knock people out of their positions. My confirmation, I want to get above this level of $24.85. It's less than $1 away right now, currently trading just above $24. Therefore, I'd give it up just to get some confirmation to the upside, but this stock has a lot of potential to move to the upside after this consolidation. Here's the last stock on the list. No surprise, this actually is still trending down here as the weakest one in the list. But what I really like about it, we're finding strong level support here around $66. Price action just got back above the 20-day exponential moving average. We're currently in the zone here of resistance at 68.69. If we could break out to the upside of the actual zone and not just the level here, that zone ends around $70.34. So that's my confirmation level here. I'd like to see price action get above this level before getting too excited about any bottom fishing. All right, VV Nation, I hope you enjoyed tonight's presentation and the two industries I brought to your attention: bottom fishing on chemical fertilizers and playing the continued momentum that we're seeing in computer retail. Now, that being said, if you enjoyed tonight's presentation, make sure you hit that subscribe button, like this content, so that way I can keep you updated going forward. Have a good night.